All right, well, we'll get started. Well, first, I wanted to welcome everyone. This is the second half of the day of the Northeast InsurTech Week. And based off of popular demand by the risk managers in our community, what we've really been thinking about is the new workplace. And depending where you are in the country, some of you have started to come back to work. Some of you have a good proportion of your workforce that is essential workers and has been working the whole time in the office. And others are in this new normal to really think about, is there work from home forever? So what we're going to be talking today about is balancing the risk of work from home and some of the InsurTech solutions that can help address that and really move us into the next evolution of work-life balance. So this event is part of InsurTech Week. And the Northeast InsurTech Week is an alliance between 5 different community-based organizations that serve the New York, Hartford, and Boston areas by providing educational content. And we will continue to do events, but this week we have 2 events left. So there's Harnessing Innovation Ecosystems, which will be put on by Innovation Underwriters based in Boston. And then on the 17th is Founders Journeys, which will focus on female founders' journeys, put on by Quesnay. And then the next InsurTech New York event will be on Core Systems Evolution on August 27th. If you guys hadn't heard yet, InsurTech New York has formally launched its growth stage accelerator. More information can be found on our website, InsurTechNY.com/accelerator, but you're welcome to read some of the overview about the program, and I encourage those growth stage InsurTechs to apply to be part of the program. Today for our agenda, you're here listening to the introduction. We'll go right into our panel on the work from home forever, balanced approach to new workplace risks. So we'll be talking about workers' comp, we'll be talking about general liability, and we'll be talking about internal corporation risks. And then after our panel, you'll have the fortunate opportunity to hear some founder stories from TrustLayer and LifeVest on how they founded their companies and what were the stories behind it. And then we'll close up with some closing remarks. So we'll kind of roll right into the panel, and I ask Brett Smith to introduce our panelists.
Great. Thanks, David. I appreciate that. And thanks everyone for coming and participating today in the afternoon panel. It's very appreciated, and I look forward to what you guys have to say. Our afternoon panel, as David said, is titled A Balanced Approach to the New Workplace and the Risks Involved. Today, our first panelist is Ted Chen. Ted is the CEO of Lifesaver, which is a fleet safety platform used by thousands of drivers. Ted has held senior roles at top Silicon Valley companies, including AOL, Yahoo, and Altera. Steve Lonergan. Steve is the second panelist today, and he's the Chief Business Development Officer at SD Refinery AI. He has over 4 decades in insurance and reinsurance covering workers' comp, long-term disability, and high-limit life insurance lines. Third, we've got Woody Hill. Woody is a Customer Experience Officer at Texas Mutual. He has over 30 years of workplace safety, health, and leadership experience with workers' compensation carriers, insurance brokers, and governmental agencies. And our final panelist today is Bill Hoy. Bill leads member experience at Zero, a subsidiary of Everest Insurance. Bill has held roles in technology and customer experience at Apple and in the Pennsylvania school systems. And David will be moderating today, which we all know. So David, feel free to take it away.
Thanks, Brett. I'm really fortunate to be able to share the stage with these panelists today. They really represent the depth and breadth that you have to look at in terms of risk from working from home. So I want to start off with the first question for Woody, because a lot of organizations are facing the challenges of who should work from home and when do you make those decisions. So Woody, I know that you're both thinking about from your customer standpoint, and you're also on the committee that decides for your work from home policy for Texas Mutual. So could you share how you think about work from home versus recalling employees to the office, and what are the key milestones and measurements that you use to make those decisions?
Sure, thank you, David. Let me tell our story from the beginning back in March, when we were getting a better understanding of COVID and where we may need to deploy our workforce to a work from home environment. We put together an incident response team, which had already been developed. It's part of our business continuity plan and disaster planning procedure at Texas Mutual. That team is made up of occupational physicians and epidemiologists, our senior leaders in insurance operations, and as well as our risk management team. And we really were looking at information and data around what was coming up from the CDC and World Health Organization. But for us, it was a matter of making that decision on March 16th to send our entire workforce home. And we have triggers or an incremental approach to how we look at employees who work from home. Essentially, we had 30 members of our 400 person team at our home office in Austin become a skeleton crew, essentially to manage operations. For us, it was a matter of also providing protective equipment and making sure that we had better controls around housekeeping at our home office, but also ensuring that employees working from home were able to execute on our business continuity plan. Our primary focus for individuals that would have been returning in the skeleton crew would be any comorbidities. They have any underlying conditions that would make them at a higher risk. And therefore, we really didn't want individuals coming to work that fit that category. This is all a volunteer basis. But I mentioned we took an incremental approach. We have return 1, 2, or 3 triggers for us. We were looking at a voluntary return to work for our employees, or returning back to our operations in 25% increments on a voluntary basis. And the triggers were a 50% decrease in regional COVID hospitalizations from peak, or 14 days sustained reduction in hospitalizations, and that was determined by our medical staff. We initially looked at also, looking forward, how we would balance this for any of those triggers, and we looked at case growth trends, positive test results, daily new hospitalizations, and/or mortality rate, death rate. We launched our return to work on June the 6th, and we had approximately 30% of our employees return to our operations. And again, we were looking for those on a voluntary basis that didn't exhibit pre-existing conditions. As I think most are aware probably on this call, that we were moving forward with our plan into a return 2, which would have been another voluntary return of up to 50% of our employees. And that would have been an 85% decrease in regional COVID hospitalizations and/or a positive test result that remained below 10%. Unfortunately, where we are in Texas, we haven't seen the numbers decrease in the number of COVID cases, as well as our hospitalization rate. So as a company, we made a decision to halt our return to work in our three different return criteria categories, so we could get a better handle on it. When making a decision to return, to bring anybody back to the workplace environment from a health and safety standpoint, you really should be looking at, the feedback that we're receiving from the CDC around those comorbidities. They really are critical. And if you're going to be returning people to work, then you really need to focus on how do you manage and control distancing, social distancing within the work environment. How do you control housekeeping, hygiene? Those are all considerations that we had to take and look at before returning any of our employees to the work environment. Working from home, our considerations were around health and safety and communicating what our policies were around, very similar to what we would provide to our customers. Working safely, distancing, and really just trying to communicate on a regular basis information that we were receiving from a number of different organizations. I would say to you, and I'll finish the question here, the biggest challenge that we had was consolidating information coming from different agencies and how we could use that data and information for our own employees, but also how we would develop tools and resources for our policyholders. And that's how we've managed it. Today, we are still sitting at what I would refer to as a return to work level 1, which is in our policy around continuity. And we have about 25% of our employee population working in one particular area of our building so we can control access and egress. That's for housekeeping purposes, but also for social distancing. We're likely not to be looking at return to work until, again, to evaluate it after Labor Day.
It's a pretty comprehensive guide, and I hope for the risk managers listening, they were taking notes, but we'll definitely have this recorded. So if you wanted to take some of Woody's pointers and apply it to your programs. And I want to shift for a moment because I know not all workforces are made up of people that are in a physical office. And I think, Ted, you have a pretty good perspective of the essential workers that are in fleets and in transportation. I was hoping you could share what work from home looks like for essential fleets and what proportion of company vehicles start their journeys at a home instead of a central hub, and how they've been looking at it.
Thanks, David. So, excuse me, as Brett mentioned earlier, Lifesaver Mobile is a fleet safety solution. So we feel like we talk to a lot of fleets every single week, and we kind of understand how they're thinking and dealing with the pandemic these days. First off, just to kind of give a little bit of background as to what we're talking about, and when we talk about the word fleet, it's not just the over-the-road trucking. It's a much more broader definition than that. It's basically any company that operates a group of commercial vehicles, whether they be owned by the company or by the employee, but they're being used for in the act of employment. So that opens it up to a huge number of companies, as well as a huge number of employees. And so when we talk about that definition, the definition of fleets, we talk about fleet segments and how we sort of think about the different companies in different segments of the fleet world. And I think that's important because that's kind of, to answer your question, you kind of have to think about them in the different segments, because each segment's probably going to have a different answer. And I'm going to only cover a couple of those today. So we work primarily, I'll cover the five segments, and then the two or three that we work in the most. The five segments that we kind of self-define fleets, the fleet world into, is work truck fleets, final mile delivery, government, sales and service, over-the-road trucking, and gig economy fleets. And so I think those labels hopefully will be self-explanatory. But diving right in, I think the two or three areas that we see the most traction in today, currently, are the work truck fleets, final mile, and sales and service. The work truck fleets, just to define that a little bit further, those are the white vans that you see on the roads every day. The verticals are quite varied: construction, plumbing, electrical, HVAC, pest control, landscaping, telecom, so on and so forth. So you guys are all familiar with those verticals. And final mile is the other one that we see a lot of traction in. And you can imagine those two, work truck and final mile, are going through the roof in terms of driving volume. Number one, the work trucks verticals are all categorized for the most part as essential services. And then you can imagine final mile is booming because of COVID. So in those two segments, I'm going to stay on those two segments. I think the answer to your question, David, is different, right? Because in the work truck segment, vehicles probably are most likely being taken home, and then they start their workday from their residence, but they do probably need to load up every now and then at the central hub to get new parts and new equipment every few days. So there's a need to get back to that central hub every now and then. And so I think that's probably what's happening nowadays with the work truck fleets, is that they're taking them home and then going back on an ad hoc basis when they need to. On the final mile side, of course, it's totally different. Every day they need to go to the central hub. to pick up their deliveries, whether they be heavy goods or light goods. And obviously, there's the heavy goods are the folks that you see on the roads on the highways these days. Folks like JB Hunt and XPO, and then the light goods, parcel delivery, so on and so forth. They obviously need to go back to their central hubs to pick up on a daily basis as well. Sometimes they need to go back more than once. I think I've heard the statistic that an average parcel delivery guy makes 100 deliveries a day, or 100 carries 100 packages a day. So they may end up having to go back more than once, especially with the volume of deliveries that are being required by everyone these days for residential delivery. So I think that's kind of I wish I had a single answer for you, but I think it depends on which segment of fleet we're talking about.
Sure, I think that gives the audience a good background of what it looks like from the fleet and final mile perspective. So I know that for the insurers and the underwriters listening, that this all of what's happening exists in the world in the context of data, collecting data about incidents, collecting data about claims, and collecting data in general for being able to underwrite the risks. And I think, Steve, it would be great to hear your perspective on what are some of the new challenges that insurers and TPAs face when they're collecting workers' comp incident data, especially if that happens in the home where they don't have complete dominion over the collection of that data or how that data can be used completely.
No, thanks, David. And it really is a challenge for the comp carriers. And, one thing maybe that we all kind of think about is telemedicine and, Zoom consultations with physicians and that type of thing. How do you capture that in terms of the claim record? How do you use that in an intelligent way to manage the claim? Obviously you've got the plaintiff's bar chomping at the bit now with all the potential COVID-related opportunities that they see, and in establishing causation of the disease in the workplace. So I think it's probably never been as important for insurance carriers to have a smooth flow of data and a good track that they can go back to in case there are complications with the claims. And a lot of times that is not captured in the system. It's something that, excuse me, is really only discoverable by analyzing the unstructured data and the notes and the claims and underwriting files. So, we think that, COVID is really going to cause a lot of companies to take a second look at their whole approach to managing claims and, how they track all of the employee wellness initiatives in the new environment that we're in now.
So I want to shift the discussion a little bit now that we have the background and context about where everyone is. So what are some of the inherent and different risks in this work from home environment? And I know that, Bill, with the solution you have with Zero, you focus a lot of attention on behavioral-based safety and how you look at changing the minds of the users and the employees and the people on the fleets. So can you share in terms of your concept of behavioral-based safety, and what are some of the risks and what are some of the ways that technology can help you and address those risks?
Sure. So the notion of behavior-based safety, of course, is that it's a process, and it typically happens in a traditional workplace environment where, you can watch one another, and it's a top-down, bottom-up sort of model where you have that cross-flow of information from those in the field saying, hey, this is dangerous. You send that to middle management shares it with leadership, and they make decisions and bring it, solve the problems there. So it focuses on what people do and how they analyze what they're doing, and then applies research and intervention strategies as things improve throughout that process. Now, when you're at home, it's a little bit different than that. Frankly, I've been working now from home since I started with Apple. When I was with Apple as a remote employee, and one of the way they mitigated that was every year you had to submit your work home office ergonomic plan. That included pictures and angles and all that good stuff. So we were doing that in 2012, 2013, and that could be an important thing. Frankly, for me, the biggest problem is the refrigerator. That's the most workplace danger for me, but I don't know about anybody else standing there, but that's my problem. But otherwise, to flip the book on behavior-based safety, I think it's important that first off, we have an open dialogue around it, that it's an open line of communication. Hey, we're maybe all not comfortable doing this on a daily basis. Cats, dogs, we talked about it before we started today. You know, you have your family stuff, you have other things going on. When kids are home, it's difficult to keep your head in work without getting that frustration level up. So frankly, over the spring for me, it wasn't necessarily my physical safety and falling down and slip, trips, and falls, the more common things that happen, or workplace related, where you have machine guarding issues, which behavior-based safety is a great thing to do. But it came down to my overall level of stress was much higher than it normally would be in a traditional office scenario, because there's a lot of peripheral stuff. So it's managing those peripherals in terms of your work environment that I think is going to be the tricky part moving forward. Now, how do you underwrite that? I don't know. Your underwriters out in the field, I don't know how you underwrite for that. It's a tricky thing to do, but we have to somehow quantify that. Now, on a platform like Xero, you open that line of the line of communication back and forth. You can start to mitigate that a little bit, but there's a lot of other tools in the marketplace that do that as well. But it's combining the traditional safety approaches and making sure that your work environments are safe with modern communication tools. I think there's a lot of power there.
So Woody, I was hoping you can maybe build on some of the discussion that Bill had around some of the risks, both psychological and social, because I think although Bill is pretty fortunate and used to work from home, I think the majority of probably your team and your clients are not used to it. And how do you see that evolve? And what can you do to help your clients to have their employees cope with it better?
Sure, thank you, David. And Bill, I can understand that whole refrigerator concept. It certainly affected me and many of my friends and peers. So our approach, let me start by saying that we have about 70,000 policyholders, and in recognizing during this crazy time in COVID that there was a direct impact to our business, our book of business, and the majority of our small policyholders. Our approach was to release a dividend early. We're a mutually held company, and we provide and recognize our policyholders for their safe workplaces. So we released about $330 million in May, and we know that helped contribute to, for those policyholders who may not have been prepared from a continuity standpoint, to provide either safe work environments, ergonomics, or just managing their day-to-day operations during COVID. We thought that would be a benefit. We also provided about $2 million in relief grants, economic development groups within Texas, to food banks and to organizations that help those most in need, and that was throughout East, West, and North Texas. But from a standpoint of how we provide safe workplaces and what we're addressing with our customers, I think Bill mentioned that ergonomics is a big piece, but when you think about the biopsychosocial elements of suddenly not having work at home, and now you are working at home and you have stressors around, your family's with you now 24/7, you might be homeschooling, there's a lot of other things that are going on. So our promotion is around education on, obviously ergonomics, but also talking about employee assistance programs and who they can talk to alleviate some of their anxieties. We're also a company that we're self-insured for our healthcare program, so we also provide wellness grants to our policyholders. So wellness is a key, it's a crux of our overall health and safety commitment to our customers, as well as to our employees. So internally, we've had, Zoom Pilates for our staff. We've tried to have Zoom lunches and circles of meetings where it's not just necessarily all work, it's a little bit of downtime, a little bit of banter. with our customers, we're reemphasizing the need to, work rest breaks. I think, we're all finding that you're stuck in an office all day, you walk by it, you feel very tethered to it. It's difficult to get away and to have what I would call a break. I would say too that we're focusing on, we talked about, I think Bill mentioned, or I think Stephen mentioned telemedicine. We're using tools, like FaceTime to allow us to work with our customers so we can give them recommendations on how to, set up a workstation. And it doesn't necessarily take a lot of resources to provide a better workspace. Promoting work stands, during your daily work. Using books and other things that help you raise monitors to the right height. There are things that we're trying to add value. We have a call center environment which is specifically to safety services, and we're promoting that in communication to our customers as well. That we have staff that can help them and walk them through assessments, work at home assessments, managing disaster preparedness plans and the like. So that's been our approach. Another thing that we did too for our customers is we took some relief on fees, late fees, relaxing payment plans, try to be, be that emotional partner and recognizing that, we need to be empathetic to what's going on in this environment. And there are a lot of good companies out there that have done very similar things. And we think that that's going to help with resiliency. It'll help with our retention. And also, at the end of the day, it'll provide a safer workplace for not only our employees at Texas Mutual, but for our policyholders. And I failed to mention our relationship with our agents. We're leveraging, our partnerships with them to communicate to all of our customers. And as things change, we think that the key here is to keep the communication going at the right time, at the right amount. And when it pivots, be sure that you're right there to help the customer when they need it.
Yeah, that's terrific, Woody, that you have the flexibility to offer all the programs, including through your call center, and we're able to do the early dividend. So Ted, I'm kind of curious, since you have the luxury of working across a lot of different commercial auto carriers, are you seeing the same thing in terms of them having flexibility to either offer some type of dividend if they're a mutual, or to share back some of the initial premium? And then do you think that this overall trend will push forward some of the new innovations like usage-based insurance into the future?
Yeah, so definitely we're seeing a lot of refunding on the personal auto side, obviously based on lower driving volumes. And you've seen all the news, seems like every week there's a new carrier that's announcing that they're issuing credits back to individual policyholders. So obviously less driving means less exposure. That's pretty simple philosophy there. I think on the commercial auto side, I just saw a recent stat that came out in, I think it was Automotive Fleet, that said that commercial driving volume just recently passed the pre-pandemic driving volumes. So I think that it's a little different on that side of the fence. I haven't seen any commercial auto carriers announce refunds yet. And I think that's consistent with the fact that the driving volume is really back to where it was before this the virus hit. I was on the road this past weekend and noticed a pretty interesting kind of dynamic there, where I felt like there were as a percentage of vehicles on the road, that commercial vehicles comprised a much larger percentage, just kind of anecdotally, versus when I went on the highway before. So I don't know if that's any indication, but it feels to me like that really reflects that notion that the commercial vehicles are really not driving that much less, whereas personal drivers are driving a lot less. With respect to your question about UBI, usage-based insurance, obviously that's kind of the holy grail. Most carriers are moving towards that vision in lots of different ways across all different lines of coverage. That's obviously the promise of IoT will help with that greatly. I think that's why IoT is so hot these days, or at least to the insurance world. But I do think from an auto perspective, it's great that, you know, mileage is a very bright indicator, easy indicator of exposure, but it's a lot more than that. Behavior-based metrics and attributes can be taken into account, and I think that's where a lot of carriers today are looking for a more holistic usage-based insurance profile, not just insurance. Not just mileage, which is just the tip of the iceberg, but a more holistic behavior profile that they can use for smarter underwriting. I think that's where people are headed. Of course, it's going to take a while, but we think that that there's a lot of solutions out there today, and we'll evolve with them to get there.
Yeah, so Ted, I can definitely your view. I had an opportunity yesterday to drive into Philadelphia and saw the same type of mix with a lot more commercial vehicles relative to traditional passenger cars. So I want to shift the last piece of our discussion really to looking forward into what's next and what risks we need to think about and what we can do. So I first wanted to open up to Steve to think about the data perspective. What opportunities do we have from the data that's going to be collected through the pandemic to learn? And also, what are your thoughts in terms of some of the things we may have to watch out for in fraud or misrepresentation of information?
Yeah, no, it's a great issue, and it's, you know, really going to be challenging for the actuaries and the underwriters as they try to, you know, see that huge drop that we've seen in elective medical procedures, you know, driven by the need to preserve capacity for COVID. You know, how much of that is going to be delayed? How much of that is going to exacerbate conditions that people have? You know, it's one of these things that, you know, I don't think the actuarial community has ever had to deal with such a radical, you know, pivot from, you know, normal medical care to this, you know, crevasse that we're in now, and then what's going to be the new normal. You know, and of course the other thing is going to be those all those billboards you see on the highway with "Have you been injured in an auto accident?" I think in about a month it's going to be, "Got COVID? You know, call 1-800-SHYSTER and we'll sue your company." So, you know, I think the world is going to change pretty dramatically in that fashion as well.
So I wanted to shift over to Woody, because I think you make a good point, Steve, about some of the new dynamics that are going to happen. And a lot of people have talked about that the country in general is not just facing a health crisis, but also facing an economic one. And with a lot of the social unrest, we're seeing that unravel, and even just how people are reacting to having to wear masks in different geographies and different places. It's new. So I was curious, Woody, your perspective on that, on how is Texas Mutual evaluating the actual risk of certain job classifications or company classifications? I know some companies are doing some new things, like distilleries are now making hand sanitizer. I want to see how you view that.
That's a great question. Well, again, it's about, you know, how do you evaluate risk and risk quality, you know, from an underwriting perspective. And our teams have really been working on the virtual aspect and how you can create that value. But what we're finding is that, you know, a lot of our policyholders have pivoted on their operations. And you mentioned distilleries. We've got companies that were in apparel manufacturing that are now exclusively making protective equipment, whether it's clothing or masks or some form of respiratory protection. And I suspect we're going to see a great deal of this as especially smaller businesses or, you know, middle market accounts are looking to, you know, create value and turn a profit in their operations. I think, first of all, I applaud the resiliency, but I think that as an insurer, we have an obligation to evaluate the classification and has it changed. You know, you might see it typically, you know, you might see a landscaper that, you know, hangs Christmas lights during the holiday, which is a seasonal exposure, but we're likely to see complete changes in, business operations and their models. You'd mentioned early on about respiratory protection and the unrest. One of the areas we're focused on is workplace violence. I don't know if you've heard, but it seems to be happening across the country where customers come into operations or businesses and they've been asked to wear respiratory protection, and it turns into a violent situation. We want to make sure that our customers understand how to de-escalate or how to manage those types of exposures. I suspect we're going to see a great deal of that. Couple that with anxiety around COVID and just the change of day-to-day life, I think that exacerbates the issue. And the last point I'll make here is around, respiratory protection and how that, affects the compensability of claims and whether there's an exposure related to that or not. Masks in general, depending on their level of protection, we're seeing our customers are using scarves, they're using bandanas, they're using N95s, they're using level 3s. And the questions that come to us, what are the most effective types of respiratory protection? And if you'd asked me prior to COVID, and my background is with, Cal OSHA, I would say to you that you need to fit test your employees. You need to make sure that they understand the limitations of wearing a mask. I think we can do, as an industry, we can do a better job of communicating to our customer plant what the expectation is around using mask devices, and how they're to be used as either to protect you or to protect the community at large, because I think there's some miscommunication around what that means. And I think it creates false sense of security. That's how we're approaching it. We just want to make sure that the communication's out there. Hope that answered the question. I went a little bit off in a little different area, but we're trying to, as the things change, we're trying to move with where the risk occurs and how we can address how to control it.
So last question in kind of rapid fire succession. I'll give everyone a chance, but this is really the takeaway question. So for the risk managers and loss control leaders listening, what tangibly can they do in the next 90 days to reduce risk internally and maintain a safe and productive work environment for their teams and their clients? And let's start with Bill.
I mentioned it earlier, and Woody will dovetail on what you said. I think that the communication, both from leadership to the remote workplace and from the remote workplace up to leadership of an organization, is imperative. And there's so many tools on the market right now that'll do that. But it's also, germane conversation as well. It's got to be to deal with each of these things, little things that we have to deal with on a daily basis, that it's all new to all of us, that it makes sense inside of a given organization. But I think, David, that the communication factor, and it's got to be as clear and concise as possible, and also transparent to some degree as well. I mean, there's a lot of that too, that between managers and employees, there's always been a little bit of hesitancy there to be completely open about things. Now we need to be that way more often than not. And regardless of the industry, I think that's where the future is when it comes to safety from a work from home environment. I think there's a lot of communication there that has to occur. So that's what that would be my notion into that idea.
All right, Ted.
Yeah, I'm gonna. I'll take a little different tact, of course, given that I focus on fleet. And we had a recent blog post that addressed this issue. I think with the unprecedented focus on corporate safety that the pandemic has brought, EHS folks have a unique opportunity here. They hopefully seen the forest for the trees. They can, no doubt, they should be focusing on here and now on the most important thing, which is COVID, and how to make sure that folks are safe from that. But beyond that, there's this unique opportunity because of this unprecedented focus on corporate safety, and they should, if they have the opportunity and the bandwidth, should strike while the iron's hot to move the needle on persistent corporate safety issues, right? Things that have been an issue in the past and will be continuing to be an issue in the future. And I think that means threading the needle with cost-effective, COVID friendly, or not COVID friendly, but obviously taking into account the pandemic, solutions that can drive that, move the needle and improve safety. And I think there are ways to do that with no touch solutions, that type of thing. So I do think it's a unique opportunity, a challenge, but also an opportunity.
Steve?
Yeah, I think to Woody's point, I mean, it's a great opportunity for the industry to step up and become a real business partner, especially for the smaller businesses that are, you know, having unprecedented stress put on them. And the last thing they need is their insurance carrier to, you know, to threaten to cancel their coverage because they're 30 days late. So I think it's a real opportunity to build loyalty with customers and to establish some long-term connections that, you know, hopefully will be positive in the long run.
All right, Woody, final words.
I would say that first and foremost, senior leadership has to have a clear communication to everyone in the organization. So it needs to start at the top. The CEO has to have a messaging that delivers it down to every employee that's working from home. Continue to manage their communication around health and safety. Programs such as employee assistance and people to talk to. I think that when you look at the overall worker, total health of the worker, it's not just the physical environment, it's the emotional, biopsychosocial thing that's going on with all of us, essentially. I would say to provide the value to customers, to our policyholders, leverage technology. You know, we've all done, you know, most of us in the field have done telephonic visits, you know, we've met with our customers, but really use, you know, the tools that are there today to demonstrate the value that you bring to the relationship. You know, virtual surveys can be just as effective as boots on the ground. Make sure your customers know that that's an option and an opportunity. But, you know, like everyone has mentioned, communication at the right time, at the right pace, and the right amount, and when things change, so that you're delivering the value.
All right, well, I want to thank all of our panelists, Woody, Steve, Ted, and Bill, and we're going to move on to our next segment, which is Founders Stories. Brett, in a moment, will introduce the founders, but just to give context, this is a new format that we're trying out, and the idea behind it is that there's a lot of great insurtechs, but really the stories behind the founders are some of the most powerful tools for you to really think about what changes are happening in the industry and what you can do. So we have one company, TrustLayer, which is going to be talking from the P&C side on supplier risk management and their story. And then from the life side, we'll have LifeVest. So I'll invite Brett to introduce our founders for the founder story, and John will start. Oh, Brett, you're on mute.
Sorry about that, David. We hit at the same time. So I apologize, but yeah, to touch on what Woody and Bill are talking about, I think we all need to substitute some exercise for the virtual happy hours and get back to health here, and definitely take the time to you know, to take breaks throughout the day and you know, walk around, get some exercise, and don't be so sedentary all day. So yeah, I think that's those are some definitely things we all need to do and do it a little bit more. But yeah, I appreciate that, David, and that was a great job. I think the panelists were great, and I appreciate all your insights. Yeah, so today our first speaker, as David was alluding to, is John Ford. John is the CEO of TrustLayer. TrustLayer's proof of coverage Corda application is the winner of the R3's Corda Con InsurTech competition. Prior to TrustLayer, John held various roles in private equity and in the investment space, excuse me. So John, I'll let you take it away, and you'll learn a little bit more about your journey into TrustLayer.
Okay, great. Thanks for the intro. And I'm excited to be here. David, is it possible for me to share a screen?
Yeah, go for it. I think you just have
I might need to click a button. So what I thought might be, it says I need to share while someone else is presenting. Anyway,
yeah, I can stop and then.
What I thought it might be interesting to just share a little bit about my my background. Let me know when you guys can see that. Our background building TrustLayer and one of the larger initiatives that's taking place in the insurance industry. So the pain point that the insurance industry saw was that, as risk managers know better than anybody, that you have this $1 trillion industry that's based primarily on emailing, mailing, and dare I say faxing paper documents around. And this was a pain point for me. I was doing some investments in the construction space, and I thought, like, boy, there's got to be a better way to do this, where we would have like a vendor that wasn't able to work on the job site because they didn't have the right certificate of insurance. And then once we actually got that piece of paper, the challenge was you didn't know if the information was authentic. We have some people, some customers that have had vendors where they just have vendors that just lie about their coverage, or just because the documents were authentic doesn't mean that they're still current, especially in this day where there's such instability in the market. You've got lots of vendors that are not paying their premium and are having their insurance get canceled. So that has been, you got maybe another 30, 60 days where there's some moratoriums on canceling coverage from the insurance commissioners. But when we talk to risk managers, they see this like deluge, this tsunami of compliance chaos that's coming down the pike, where you're going to have lots of cancellations. And when we talk to our RIMS friends, there's great uncertainty in what happens at that point. And so a lot of companies are doing zero-based reviews on all their vendors starting in like 30, 60 days. And then lastly, the information was trapped on documents. And so one thing I thought was somewhat interesting is the insurance industry. This obviously is like, it just accelerates this problem that's been around for a long time. So the insurance industry, some of the larger brokers and carriers got together 2 years ago, before COVID, obviously, but they wanted to address this, and they invested $40 million into a capacity to create a real-time digital proof of insurance. And so now we're working with a number of the companies that have gotten behind. These are the larger carriers, a group called the Institutes, which the brokers on the line would be familiar with. And they've created a standard to allow for this digital proof of insurance. And now we're working with them to actually create a capacity for a vendor to be able to prove in real time that they have coverage. This is especially challenging. Just imagine, like, remember years ago when you would connect your bank account to eBay, or excuse me, to PayPal, and you'd have to just put in your account information, and like 2 or 3 days later, you might have like 2 small micro deposits. That took forever, right? It might take like a couple days, and then also the information is very limited in what a company like PayPal would learn. Now, when you connect your bank account to Venmo, the process is great. Simply can, right then and there in real time, you can connect your bank account. And the company behind that is a company called Plaid. And so we're building Plaid for the insurance industry, working with really large and small companies that are interested in finding a way to be on the forefront of this initiative. And one of the challenges, of course, with COVID is it's causing this compliance chaos, but one of the upsides is it's really pushing for a lot of digital adoption, a process that might have taken years. In a lot of cases, we're seeing accelerated. We're working with, talking to Fortune 500 companies that are interested in participating in a pilot that's moving forward with a number of, like I said, a number of larger carriers and brokers to be able to just provide real-time proof of coverage, moving away from the certificates. What's exciting is there's also a lot of, this is really a groundswell of interest in building this capacity. The broker communities is getting behind creating real-time proof of insurance solution, especially for the P&C space. The RIMS, we're in contact with dozens of RIMS chapters, as well as the national RIMS folks, who are just awesome and providing really great feedback, guidance, and as well as people that are making literally a lot of the forms right now that are being used. So it's really valuable to get each of the stakeholders on board with this, because previously there've been efforts where it was like maybe just the brokers or just the risk managers or just the carriers, and or just a single broker would try to do something. And it's, regardless of how good the solution is, there's very little likelihood that if, for example, Marsh comes out with the greatest system in the world and is just not going to use that system. So there's really no value for the risk manager if they end up having a bunch of siloed independent systems. So what's unique about this opportunity right now is that there's a very meaningful groundswell where competitors, frankly, are all getting together to help build out this solution. So it's a little bit about kind of this initiative that's taking place. There's another, like I said, there's about $40 million that have gone into this so far from these big players. And then TrustLayer's role in all of this is we're just the company that's going to be leveraging this infrastructure to create a real-time proof of insurance solution. So if there's anyone that's on the call that's interested in participating, I'd love to always chat to give feedback, because it's really important that the RIMS members, since they're so vital in this workflow, have their voices heard. And that's one of my objectives is to kind of help facilitate that, to make sure that these as this real-time proof of insurance solution comes to market, the RIMS members have their seat at the table.
Thanks, John. And I think with all of this work from home, it's not really possible anymore to use paper documents. And I think that it's more important than ever to verify your vendors. And especially from what we heard this morning with Oniva, people coming into the house, you want to know everything about them. And I'm excited to hear how TrustLayer is solving this problem. So we want to shift over to the life side of things, and we will have Zaida present about LifeVest.
Great. So I'll give a little intro to Zaida and John. Congratulations on all the success you guys had recently, and I really think you guys are onto something huge. And to your note a moment ago, I think that it's a great thing that we can get carrier collaboration, kind of move some of these innovations forward. So I think more of that is going to help. Not only the carriers, but a lot of other insurtechs moving forward as well. So, so thanks a lot, John. I appreciate that.
Yeah, absolutely. Thanks.
It was great.
Thanks for inviting me.
Yeah, of course. So next our speaker, we've got Zaida Mari. She is the co-founder and CEO of LifeVest. She is a 20-year insurance executive, innovator, and strategist who served as the global CMO of AIG and MetLife's marketing officer. She has led global strategy, marketing, and product development for direct-to-consumer, agency, and affinity models. And I guess we'll hand it off to Zaida and learn a little bit more about LifeVest and the journey that took her there. Go ahead, Zaida.
Thank you very much, Brett. Thank you, David. It's a pleasure to speak and show you and tell you a little bit more about LifeVest. Well, first and foremost, LifeVest is a digital MGA. What we're doing is we're leveraging smart technology to help insurance companies and agents bring simplicity, relevance, engagement, and actually trust, much like you just heard from the other founder, to the industry. We're enabling the buying and the selling of life insurance. Our initial focus is on life, but we expect to expand into annuity and PNC. But to buy and to sell, done in a very efficient and seamless fashion. First and foremost, listening to our customers, and our customers in this instance is consumers and agents, so we listen to their values. We are a digital MGA, as I said. What we have here is a solution that offers a end-to-end a digital platform, quote, bind, issue, in real time, and it's structured to bring out and roll out more modern products that are more receptive to the new world that we find ourselves in, not just the new normal, but the new digitally connected world. When you find yourself that on average, I think the latest stats say there's about 6.5 billion people in the world on the internet, and on average they spend about 6.4 hours, I think I saw, doing business on the phone. And so that is the reality. It's a much different world. And in the context of buying and selling insurance, because we're so agent centric, we're respectful of the consumer. The consumer wants a delightful experience. They want an experience very much like the Amazon and the Apple experience, and they want things done in a very simple fashion and in plain English. So the platform that we have is rolling out Q4 this year, we hope. And what we have, as I said, is a digital platform that goes from quote buying issue. It also is has been architected and engineered to allow for a whole slew of services to be provided to the agent, because at the end of the day, part of our conviction is that the agent is hugely underserved in today's world. One, because they haven't really come up to be modernized. And from that perspective, the solution offers services that they can use. For example, we intend to support them with lead generation. We intend to support them with content. We intend to support them with training on the go. So that way, even if you're just onboarding a new product and a new agent to your, to an MGA, basically they're able to do this on the go. They're able to immediately, before the agent starts with you, they can learn a little bit about your brand. They can learn a little bit about your product. They can learn some sales tactics, and essentially supporting the working on doing business on the go. And so not too different from the world that we find ourselves in because of COVID. Obviously that by itself accelerated the digitization. Like John, a lot of the insurers for a long time have been talking the talk, not necessarily walking the talk. They have huge aspirational goals of being digital, but the reality is that it was slow coming. And I think with COVID hitting in, it was the new wake up for everyone that absolutely we can't just say we have to be digital, we actually have to do something. So we offer a solution, because at the end of the day, we're solving a few different problems. One of them is, first and foremost, the need to support the consumer in a very seamless, integrated, frictionless way, listening to what they need. They need product that's simple. They need product and access to the distribution of their choosing. So if they're self-service, they can go and obviously use the platform. If they have an agent, the agent will already be on our platform, so they can assist them and actually conduct business online. And the other pain point, of course, as I said before, is that the agents themselves will have the ability to not only say that they're modern, but actually roll out products that feel modern, because they can take an intake on the application over the phone, or hopefully in the near future in person again, taking an application on the live side. And further, our platform allows for the simple products with accelerated underwriting in mind. So we have built out of the box an AI solution that brings in external third-party data and enables a carrier to facilitate accelerated underwriting in a different way. Or that's optional. They don't have to take that. They can actually just use the entire journey and experience and platform and bolt on their accelerated underwriting engine. So at the end of the day, the bigger picture is, of course, carriers want to be digital. This is an opportunity to enable them to carry out that vision. The agents are demanding modernization and the need to have a hybrid sales approach, so that when they're not conducting business face-to-face, we have a platform that can help them. And finally, consumers expect a frictionless customer experience, and we're providing to them as well. So we're very excited about this, and we're just coming out of stealth mode, going in live Q4. We've had a lot of conversations with carriers and IMOs and other agencies that are looking at our tool and super excited about what they see, because for the first time they're seeing that someone out there, and the someone is LifeVest, is supporting their needs, their interests, and looking out to make sure that we provide the agent with tools to help them grow their portfolio and stay in the business. So thank you for this opportunity, Brett and David. And again, if anyone on part of the team is looking for more insight and more information about LifeVest, my contact information will be provided, and we certainly, look forward to introducing the platform on Q4.
All right, well, I want to thank both John and Zaida. I think that it's really important in the world that we're in to continue to look forward to new solutions and how to integrate InsurTechs into your traditional processes. So in closing, I just want to thank our speakers and really just let you know that this was part of Northeast InsurTech Week. So there are still 2 more events. Tomorrow morning is Innovation Underwriters event, and then Friday morning is Kesne's. So feel free to join those events. You can find those on Eventbrite if you just search Northeast InsurTech Week. And then our next InsurTech New York event will be on August 27th, which will be focused on core systems evolution. So thanks everyone for attending.